Well, good morning. It's June 24th. Want to bring you the latest data here in the Austin metro area. We're going to start with mortgage rates. So they're starting to come down, and I would not be surprised if we see a 6 on the front sometime this week. Is it going to start a new trend? I'm not sure, but we got a lot of softening economic data this past week, softer than even expected. We started to see the 10-year Treasury yield come down, and that brought some pressure down on rates, bringing them lower. I would not be surprised if we're seeing it lower. Now, I want to caveat that if you're a well-qualified buyer, you're buying a primary home, odds are right now your rate's more in the mid-6 range, so maybe like 6.5. And if you're a well-qualified investor, you're probably paying somewhere around 7.5. But this is that blended average. Just looking at the market gives us a good feel of where things are going. I want to go over here. This is looking at May data. I'm going to pop this chart open for you. The red line is closed sales, not price, closed sales. So this typically shows you what a normal year should look like. It's like a bell curve. Sales go up. They kind of peak out normally, kind of May, June on sales. We're trickling up, but significantly lower than we've seen the past 3 or 4 years, other than the pandemic low that we had in 2020. So sales are below normal in terms of the market. For May, this is data that they pulled in as of June 10th. Sales are down about 10.5%. Average sales price down just a trickle, 0.1%. Days on market are higher. Median sales price is down a little bit. This is the week of June 9th through June 15th. So new listings are up that week about 10%. Sold listings down 37%. So softer, of course, in the market. Current months of inventory higher, about a month and a half. Median sales price about $440,000. So I want to bring you down here where we're going to get a couple charts. This is year to date. So this is blended between January 1st and May 31st for both last year and this year. So think 5 months of last year versus 5 months of this year. So total sales this year were actually up just over 1%, not much, but pretty similar to last year. Average sales price up 0.4%. Again, pretty level with last year. And median sales price down about 0.8%. So price-wise, we haven't moved that much. The big story is inventory. And I'm going to show that to you right here. So if we're looking at active listings in 2024, right now we have about 14,500 units for sale. Last year at this time, we only had 11,100, which was still very high. You come back into the pandemic, we were down in the 6,000 range. So we're more than double the amount of inventory that we have for sale. The last time we had this much was coming out of the Great Recession, 2010 and 2011. So it's been about 14 years since we've had this many properties for sale. If I come down here for pendings, we sat about 2,843 for the past month. That's lower than at any point that we've had in the past 12 years. So again, more homes for sale, fewer sales. I'll show that to you in a few more charts. This is active versus sold listings, and we're only looking at single-family homes in this chart. This does not include condos, townhomes, land, duplexes, quadplexes, or anything else. This is just single-family homes, which does make up the majority of the market. So if we look at active versus sold listings, we have a bell curve every year. I've talked about that a lot. January was our low point. We had about just under 9,000 single-family homes for sale. And then, of course, boom, we've rocketed up over the spring. We're sitting over 13,000 single-family homes for sale. But we're close to the end of June, and this line isn't much taller. So what we could be reaching is maybe peak of inventory right now. So if you are selling right now, just know you are up against the most homes that we will have for sale possibly all year. If we look at sales, which is actual buyers closing on properties, the blue line, it's trickled up a little bit, but that rise in interest rates over 7% once we got to April 1st and has kind of stayed there. We're now in late June, call it 3 months at or above 7%. Again, put downward pressure on those buyers. Typically the second quarter, April, May, June is our strongest sales season every year. And having those rates over 7% has kind of cooled that off. So we're not seeing the numbers that we normally do. But what if rates do tend to come down a little bit, maybe the second half of this year? Maybe we'll see some numbers reverse a little bit where we have more buyer activity than typical every year. But the only way we're going to know is we got to get there. So that's looking at those numbers. Let me bring you back here. This is original price versus sold price. So original price is, let's say you list a house at 500,000. That's your original price. You lower the price a couple times and get to 470, and then you sell it 460. So that would be original price, drops to 470, sells at 460. So what's the gap between 5 and 460? That's what we're looking at here. So you can see when we got to December last year, rates started coming down from October into January, and that spurred a lot of optimism. We had strong sales in that first quarter. And of course, list prices started going up. And of course, but that peaked out once we got to April. Why? Because the rates went up and it cooled the market off. So since then, you can see very clearly we've got a downward pattern since April. So list prices as a market whole have started to soften and come down to meet the buyers, who are now getting closer. So the gap between original list and sales price is closing. You can see how wide it was when we were earlier in the spring. It was just too far apart. Especially when the rates went up, and now the sellers are catching back up to where the buyers want to be. All right, we're going to wrap it up with some headlines. So these are some of the recent headlines. You know all these headlines. Home prices begin to cool down in pandemic boom towns like Austin and Tampa. Well, that's because both these markets have a lot of inventory. I'd say this article is about 2 years late. Our prices really came down the hardest in 2022. The second half, as I just showed you, we're kind of flat year over year on pricing. Housing supply hits 13-year high. Yep, we knew that. Housing market cools down as home prices near normalcy, and rent declines offer relief to residents. So what's happening in the rental market is, again, we have a lot of factors. We have a number of rentals just without any change, but then we built a ton of apartment units, and you have a number of sellers who can't sell, and then they flip their home into a rental, and it just floods the market with rentals. So what's happening is, for maybe a brief window of a couple years here, tenants may have the upper hand in the sense of being able to go find discounts or not having to have their rent go up on them every year. We're seeing rent stay fairly flat in the single family market. I'm seeing them soften more as you get into condos, duplexes, townhomes, quadplexes, anything that competes more with an apartment. We're seeing more kind of rent softening. Now, rent softening doesn't mean massive discounts, but 5 or 10% could be a lot to a tenant. So we're seeing that. But why is all that happening? Well, this story, Austin home prices jumped 87% in 10 years, according to the report. They were looking at 2014 through 2023, just last year. And in that window, 2014 to 2023, by the way, which includes some softening after the pandemic, our prices are up 87%, let's say 86 if we take 1% off for this year. So either way, typically Austin in history doubled in price about every 20 years, typically. And so what's happening now is that was twice as fast. And that even includes some of the pullback. We were probably over 100% in 2022. Now it's come back to, let's say, 87%. So Austin is still appreciating extremely well, and we're just having to pay the price a little bit for having those prices get too out of line with what buyers can afford. It's starting to come back on trend, even with all this supply, because we're seeing the prices start to stabilize. I do predict that if we keep high inventory the rest of this year, we'll see the prices soften some more. Just because of the amount of inventory that we have in the market. But just something to keep an eye on. I think we are getting closer to those long-term trends. So if you are a seller right now, I think it's clear you got to look at the inventory that you're competing against, and we got to make sure that the price is attractive to buyers, not just fair, but it's got to be attractive to buyers. And is there anything else we can do, whether it's closing cost incentives or having a good lender partnership, anything we can do to incentivize those buyers is a good thing. If you're a buyer right now, you've got a couple tailwinds that can benefit you. Number one, you have more inventory than a buyer in Austin's had to look at in 12 to 14 years. So, if you're waiting for more homes, I wouldn't. I think this is going to be the peak of being able to see the most supply in the market that we're going to have for a while. And number two, I do think rates are starting to come back down slowly over the rest of this year. I know you've heard that in the media a lot, and even we've said that on occasion, but the data is finally getting there to show that that's more likely than not going to happen, even if the Fed doesn't do that much with rates. So pay attention to that. But I would say, hey, if you want to get out there and find some deals, this is probably going to be the window to do it when you have the most properties to look at and sellers willing to sell. Anyways, I hope this was helpful. Make sure to check out our YouTube channel at Ryan Kelly Group. Click that subscribe button. We're getting close to 100 subscribers. I'm working on growing that channel with some more content soon. So pay attention to that. And of course, if you know someone looking to buy, sell, or invest in Austin, we would love the opportunity to chat with them. Until then, enjoy the last week of June, and we'll talk to you next week. Thanks.